You know how difficult and complicated it is to regulate. Are we getting in the weeds here, or is the sentiment right? Is she doing the right thing?
Well, look, in certain cases, I'm sure she's doing the right thing. Again, this is a political season. People are trying to answer the questions on the voters' minds. Since the crisis and even before the crisis, there's a lot of pushback on the kind of money that Wall Street and the banks have been making. So I think she's appealing to that. But the real point is, and you said that earlier, she wants to prosecute crooks. I'm all for that. If they're crooks, they should be prosecuted. If they cut corners, they should be prosecuted. If they're stealing, being dishonest, they should be prosecuted. I don't have an issue with that.
The Justice Department's approach to this so far, though, has been to go after settlements to punish shareholders, as we've been talking about. Do shareholders, if they're the ones getting punishment, have any meaningful oversight to correct this in the future?
Well, at the end of the day, they have the annual vote. They can throw out management. I think you've seen a lot of managements change. You clearly, at the most senior levels, seen compensation come down dramatically. Now, you can argue, well, that's a big deal. Instead of making $10 million, you're making $5 million. That's still a lot of money. And I think a lot of that is part of this issue. I mean, when you're struggling, and look, I grew up in North Carolina. You know, if you made, going back when I was a kid, if you made $10,000 as a parent, that was a fair amount of money. And I'm sure when they look at the compensation that John Mack has, or Jamie Dimon has, or Lloyd, or whomever it may be, James Gorman, they say, my God, we can't make that kind of money. How are they doing that? To me, it's up to shareholders to hold management accountable. I think they're much more involved than they've ever been. I think the boards clearly are more involved, and I think the regulators are going to board meetings and talking to audit committees and directors. So the whole nature of oversight has changed. It is much more focused on control, on less leverage, and making sure things are done properly. When someone can make, you pick the number, I don't know, $100 million trading, at the end of the day, you want to pay them. They've done that. We just need to make sure it's been right down the middle of the road, and I think that's happening.
John, if there's continued pressure to be paying these executives less and less money, which makes sense, it is all a lot of money, will Wall Street be able to get the top talent required to take these very complicated jobs? Or would one say, why on earth would I ever want to run a bank? I'll simply go to the buy side.
Well, running a bank, I would agree with you. Everything else, I think, is debatable. Listen, there are a lot of talented young men and women out there. I think the real competition for Wall Street, if I were coming out of Duke University again, I don't know if I'm smart enough to do it, would be technology. What's going on in tech, and let's take financial tech, is changing the way business is being done. It's created great opportunities and huge wealth in many instances. So I think that is a competitor to the banks. But at the end of the day, and you were at an investment bank for a while, I cannot think of a business where a young man or woman getting out of college will get broad exposure to global markets, to understand how the economy works, to interface with people by and large are team players, to take risks.
I would not disagree. Listen, working at Goldman Sachs for 3 or 4 years out of school, or Morgan Stanley, no better training program. But as you move up the ranks, how are banks going to keep those really talented people when they can't pay the big numbers and hedge funds and private equity and VC are waiting on the sidelines?
Well, big numbers is not very specific. You know, maybe they don't make the $50 million paycheck or the $35 million bonus, but people who run these organizations, who execute, are going to get paid a lot of money. It's not going to be what it was in, 2005 and 2006. But in the scheme of how people are paid, they're going to be paid extremely well.
So let me go back for a moment to the Hillary Clinton proposal, which
Sure.
in fairness has not actually been released, but we have reporting on.
Right.
There's something between holding people criminally responsible and just finding the company. And I at least have not seen this before. One of the things that she reportedly is going to propose is when there are these big fines, some percentage of that fine has to come out of the incentive compensation of the senior executive team.
Right.
What do you think about that as an idea? That's not saying they're criminals, but it is saying, it's coming out of your pocket, sir.
Here's what I have to say about it. I don't know, with the year, we had a huge trade on the mortgage market. We lost a tremendous amount of money. When we talked to the board and they went to pay me, I refused to take a bonus. Even though we made a 10% return, I don't think that's right. I think managements today, if you stumble, if you go down the wrong path just slightly, you do not produce. Compensation has to come down. I think the street and the banks are much more attuned to that today than they were 10 years ago. So I believe it's working. And I believe the focus of regulators has helped that, and of shareholders, and the financial press has really held them accountable. And you have to hold us accountable. There's no question about that.
I mean, but not everybody has your strong North Carolina moral backbone to do that voluntarily.
Well, you need a strong board. You need a strong board at some point, don't you, John?
You do need a strong board. Absolutely.
You know? Tell you when.
And you need a board that's strong, not just in determination, but to understand different parts of the business.